Alright, so let's not even waste any time. Let's just get in depth with this particular trade, right? Because the previous video, I did show you, how to use the H1, M15 and everything else. I did say about how to go in depth. So we're gonna do this. We're gonna do this way faster using the exact same principles, but I'm gonna show you exactly how to do it real fast if I was trading every single day like this, right? I was gonna do number one, H1. Again, let's cover it. Let's just cover everything. I'm gonna show you exactly what I would do usually. That's how you want to play it out, right? You just marked up everywhere that's above, and you can go, of course, mark, little areas below. But because it is pushing upward, we get a strong bullish movement off our previous candlesticks. We got a hammer over there on the H1. Very, very important to always pay attention to your candlestick patterns. Very, very important, because if you don't pay attention to your candlestick patterns, your candlesticks can literally tell you what's happening. Your candlesticks can literally tell you that they're prepping for a sell. They can literally tell you that they're prepping for a major move. Now, this is prepping for a major move off of a couple of things, right? Let's look at it. Strong movement upside, right? A rejection of our area of support. Strong bullish movement upside, bullish engulfing. Another strong bullish candle. The bears try to come in. They try to come in at this area of resistance, and they failed. The bulls pushed them all up, creating a hammer. And we still get bullish movement over there. And as expected, when you mark up support and resistance properly, a slow in momentum on your areas of support and resistance. A slow in momentum is allowed, but of course we did breach an area of support that was significant, right? So we breached an area of support because we did play over there as well, touched over there as well, touched over here as well. So this is a significant area. Did breach an area of resistance. Now, because we breached an area of resistance, remember I said you don't always have to wait for the retest, right? But this is around the place that I caught the market. Now, you did it, if you enter the trade over here, you would have made some good profits because this is NAS 100. If you see it hit against this area of resistance as well, so you'd expect momentum to slow, but you see it pushing back down. Now, what does this mean? That it's going to sell? No, it does not mean it's going to sell at all, and this is all just based upon what's happening on the H1. And the reason for this is that it's now breached an area, and you can clearly see it coming in for a retest. It's breached a significant area. It's slowed momentum at the top. It's coming in for a retest. Price doesn't always retest. It's not always guaranteed that price will retest on a zone that it breaks. But in certain situations like this, you can clearly see it's coming in for a retest. And even if you did enter your buy, say over there, if you did enter your buy, say over here, right, aiming for this take profit over here, you would still been in lots of great profit around here. Your SL would have probably been killed or in blue, and then that pull down would have probably taken you out. So what do you then do, right? What do you then do in a situation like that? You wait for the confirmation candlestick, so you wait for it to come and touch its level, and then you wait for the candlesticks going upward to let you know of the retest, right? To let you know the retest will be successful, and then you can re-enter on your positions over here for the buy. Okay, now the reason I'm saying we're re-entering this particular trade is because usually when price is up about that much, it's pretty good profits, right? So sometimes your SL would have been a break even or in blue, and because price did, of course, pull back down over there, you can clearly see that it would have taken you out. So we out that trade, we made some money. Now we want to enter this trade again. So what do we do? Number one, we want to see basically is the M15. What is the M15 telling us, right? Let's just let it play out a little bit. There we go. Okay, we had price come push down, but of course it did not close below. Remember, another key thing. When price is pushing above or below a zone, if it's pushing and the candlestick has not closed, that is not a confirmation that the trade will be successful. If the candlestick has not closed, it is not confirmation to tell you that it has breached. Even if price does come all the way down here, right? You think, okay, we're gonna sell, and then before it even closes all the way back up there, that is not a breach. That area is very much respected. That area is very much respected. And the reason we look at the H1 is because on the M15 or the M5, you'd have seen lots of candlesticks going down, right? So you would have been able to take a sell if it was below this level. But that push up would have killed you completely in whatever positions you were in. That's why we always look at the H1, because the H1 lets us know the major moves of the market, and then we just use the lower time frames, M15, M5 for entry. That's why I always base my SNR always on my H1, and I base my best point of entry, right, by noting exactly what's also happening with the H1 before proceeding to enter on the lower time frames, right? You always want to see what it's looking like, what the candlestick is doing, and so on and so forth. So we come over to the M15. You see on the M15, you know, you'd have like a break over there, but because the H1 candlestick had not closed, the M15 then proceeded to pick up, and then the H1 would have closed above. You see, that's why you don't use these as your ultimate reference of a breach of the area. The breach of the area will happen in the higher time frame, especially when it closes, and then the point of entry will then be determined by the lower time frames. Very, very important. So let's keep it pushing, right? So we can clearly see, you know, it's on this level. We don't know exactly what's happening next. Let's check the M5. What is happening? M5, we see, you know, it's pushing up. It's kind of rejecting off of there, right? So quite a little bit's happening. Let's just see the next candle, right? All the way down, all the way down. So we're going to leave it right over there. Let's see what's happening in the H1. So this is the trade I did take, but what you saw with that push down, that's all happening in the M15, the M5. So sorry that this is a little bit upward. This is just trading view sometimes. What you are seeing is basically on the M5, you're seeing this wick. This wick is what we're seeing. So if you had entered on those trades based upon what's happening on the M5 and M15, you were going to lose, because on the H1, candlestick had shot all the way down here, and then when the lower time frame started to pick up, this very same candlestick started going upward. You see, that's what we saw. Then we saw that pickup, right? We have seen that pickup pull down, and then that's what would have happened, right? We would have had that break. You'd have checked the H1. It's probably looking different now, and you see the H1 about to close around this area. So another thing that's very important when it comes to these kind of strategies is the time a candlestick is about to close. Check what time the candlestick is about to close, because this movement down here, when I was watching it, this movement happened for the first 30 minutes of the candlestick. This is like the first 30 minutes of the candlestick. This is exactly what it was doing, and then it started pushing on upward. Let's just see exactly what it's doing in the M5. But as you see, you know, if we're looking at the push down, 5, 10, 15, 20, 25, 30, 35, and then 40 still was below our area of what? Support. And then it started to climb back up. And then when you see the candlestick start to, when you notice that the H1 is about to close and it's closing strong bullish like this, what do you then do? You can then enter on your long positions. You can then enter on your trade. You can then definitely enter on your trade. Now, because this is definitely pushing upward, right? And you know, you have your areas over there that you want to make, but then putting your SL over there is a little too tight, right? So you had missed like the opportune moment of entry, but I mean, it was pushing against us. We didn't know exactly when it was going to be closing, right? So say you entered over there, it's still good to keep your SL down below, and we can clearly see where price is definitely trying to chase. We mark up our next areas. So those are the levels that price is definitely trying to push. And because now you also have to take note of a couple of things. When this movement when this uptrend started, right? When this movement to the top side started, when did it start? It started right over here. What is happening right over here? It is a spike, it's a peak, right? It came right, it's a peak point, right? It's a spike point, sorry. We're having a spike point right over here. Price has come down and it's kind of shot up. Definitely a spike point, not necessarily like slowed of momentum. It just came and it shot right up and has been going up ever since, creating higher lows, so that is another indication to tell you that we are prepping for a major move, because that's what our candlesticks are saying, right? This major spike to the top side is letting us know that we are definitely moving top side. So we can definitely be a little ambitious with the way we want to take this trade. When we have our next zones that we want to reach, we can expect, of course, slowed momentum in this region, because I mean, it is a significant area. It's another point where it made a peak and then decided to drop. So we can expect slowed momentum within that vicinity, right? If that's where you want to aim for your last take profit. However, if you want to keep on pushing onto the top side, you can very much do so. And then you can keep your SL, of course, below, but I mean, you can come down to the lower time frame as well, right? And then maybe just drag it a little below, just a little below this previous area on the M5, right? Because this M5 will help you also determine your SLs, because you know, you see the M5 has created its own little area of support right over here. So you don't want a situation where, you know, the M5, you don't want a situation where the M5 just comes to test its own little area of support and then you're taken out completely. All right, and then you can keep your distance a little below that depending on your spread on your broker. If you got a pretty wide spread, then of course you'd have to drop it a little bit more. But if you're on a good broker like mine, Athens Markets, what you definitely want to do is, you know, you can have it a little tighter because the spreads aren't too crazy. All right, so let's see exactly what is going to happen. Let's see how this is going to play out. Let's get a little closer. So as you see on the M5, we did come back for that retest. And that's where price is at right now. This is the current trade I'm actually killing right now. And this is basically how I took this particular trade. I just looked at what was happening, implemented the very same strategy tool that I've been teaching you guys this whole course. Check always, H1 is our most important. H1 is most important because that's where we're going to put out our support and resistance zones. And then the M15 and the M5, we're going to be looking for confirmations on when we can possibly enter a trade, not basing the whole trade off of these lower time frames. You don't base a trade off of the lower time frames. No, the lower time frames are just where price could possibly pull to, where we could use for the better entry point, where you want to dodge putting your SL because, you know, those lower time frames could go and retest those zones that they have created. However, on the higher time frame, it's just a wick. It's just a wick on the higher time frame, but on the lower time frames, it's actual movement going to test their own zones, right? But then on the H1, it's just a wick. So overall, the movement is upside. The H1 is allowed. If you see a candlestick, it always goes up and down. Always goes up and down. H1 is always going up and down, right? What's happening that up and down? On the M5, you're having this. M5 is going up. It's coming back to touch its area that it created over there, right? This is all it is. This is literally all it is. When you understand what time frames really truly are, it'll be so much more simpler. So we have this H1 candle list, you know, it's going upward, right? But it goes up, then it comes down, right? Then you worry, okay, it might be selling, right? It hasn't closed, but then, you know, then it starts to go up, then it goes down, then it goes up, then it goes down, and it goes down, then it starts to go up. So if you're entering all your trades based upon what's happening on the M5, you are going to lose. You use them for entry. You use them to determine where not to put your SL, where to put your SL, or where to put your take profits, or where not to put your take profits. That's what these lower time frames are used for. That's what I use them for. And as you can see, clearly profitable. And this is all because I watched what happened on the H1, right? Look, watch what happened on the H1. And look, let me show you even something that a lot of people would have been scammed out of. You see this particular candlestick right over here. When it opened, it went all the way down. So if a mediocre trader is just going to look at that, this candlestick was red all the way down. It covered all that space going all the way down. So this looks like a bearish engulfing. You think the bears are taking this, the bears are going strong. And if you just enter the trade, you're out. Whereas what was happening on the M15 at that particular point in time, the M15 had come down, you know, respected its own little zone over here, if you see it, right? Came over here, respected its own little zone. Came over here just to respect its own little support zone and then proceed on upward. That's why you wait to know when a candlestick is going to close, and you do this measure on the H1. You see when the H1 is about to close, and then you come down to these lower time frames and you look for a great point of entry. So team, that's it. I hope you guys really get in this strategy, really melt it in your heads, and really implement it into your trading, because it's very powerful. I use it till today. Very wonderful strategy. So if you guys want to keep killing it in these markets, or start killing it in these markets, make sure you practice, rinse and repeat, practice, rinse and repeat, practice, rinse and repeat. Do this in demo before you going into live. Do it in demo until you actually have it down. All right, team, I'm gonna catch you guys next time. I hope you enjoyed this very much, and yeah, peace.